There we
Thank you
go.
all for joining us tonight. We are really excited to have a few of you getting together with us. It's a great way to get together on a cold winter evening. I'm Lindy Cannell. I'm a lender here at National Bank of Middlebury. We've got Liz Reichs joining us as well, another lender here at the bank, and we are very grateful to have Heather Foster Provencher joining us from Champlain Valley Properties. She is a wonderful local realtor. We're going to kick off with Elizabeth and I going through and giving you a little breakdown on some of the basics of lending around first-time home buying, and then Heather will chat a little bit about the realtor side of things. We're going to keep it short and sweet. We're happy to answer questions. Hang around a little longer if you have more questions beyond that. And with that, we'll get right into it. Okay, so some of the things we're going to be covering tonight. Where do I start when buying a home? That's one of the questions that we're very often asked. We'll be covering that. How much money do I need to have saved? How long does the process take? What even is a pre-approval? And how does having a realtor help me?
So first, before we get into all of those questions, we're just going to break down what it looks like to buy a home. And we've got 10 steps for you. So it's just a quick overview of what this looks like. So the first step is going to be, Lindy, are you able? Perfect. So the first step that we like to tell people is to meet with a lender. So everything that we talk about tonight, when we sit down with you and talk in person, we're going to take all of your personal information and really hone in on what's your income, what's your debts, what's your assets, how much can we pre-approve you for. We're going to make it really specific to you. So meeting with a lender is the first step. If you're not quite certain if you're ready to buy, I would still encourage you to meet with a lender. We can kind of help figure out where you are in that process and what steps you might need to take to get to actually being ready to buy a home. The second step that we like to have you guys consider is doing home buying counseling. There's a lot of great programs out there. There is a free online class through Fannie Mae. This is really good just to get some more information about owning a home and the responsibilities after you buy a home, what that looks like. And depending on what your loan program is, some of them might even require that you do home buying counseling. So it's just a great time to get that class out of the way if you might need it in the future. So after you do those two things and you're ready to buy a home, the next step would be to get pre-approved. And at this point, you'll sit with the lender and we'll just go over again your income, debts, assets, and really hone in on what you can afford for a loan amount, what you can afford for a monthly mortgage payment, and then back into what that relates to for a purchase price. So how much you can start offering on homes that are for sale. So once you have those figures in mind, then you can partner with a realtor and start looking for homes. So this is where you'll tell the realtor what you're interested in, where you want to live, what your purchase price is. Do you need 3 bedrooms or do you really want a garage? So the realtor is going to know what's on the market and what might work for you, and they can help show you homes, see what's being listed. They might know if there's something that's not quite on the market yet, but might be coming. So the realtor is really helpful in those steps. And then once you find a home that you that you're interested in, you want to put an offer in, the realtor is going to help you draft that offer. So they will create the paperwork that says, I'm willing to pay this amount for the home. And they can help you with contingencies too. So I'm willing to buy this home if the appraisal comes in at a certain amount. I'm willing to buy this home if we do a home inspection and the inspection comes back and I'm okay with anything that's on there. So they're going to help you draft that offer letter. So once the seller reviews their offers and they accept yours, then you're going to come back to the lender and finalize your loan application. So we'll collect documents from you like pay stubs, W-2s, tax returns, bank statements. We'll let you know exactly what we need from you. And from there, we can go ahead and look at getting an inspection for the home ordered, ordering the appraisal, and we're going to work on getting your loan approved. So once all of those items are finalized and you officially have the clear to close, then we're going to schedule a closing date and a closing time. So this is where you will meet up with the attorney and sign all the paperwork to officially get the home into your name. And you will also get the keys at that point. So step 10 is what we consider the best step, and that is where you get to move in and celebrate. Oh, can you?
Okay, that was a lot really fast. If that felt like a big process, the good news is that could happen really fast. It could happen over a long time. Sometimes folks find a home right away. Sometimes we work with people for a couple of years. So we're going to break those steps down into more bite-sized chunks. And I also want to encourage you that that's the big timeline. We're with you each step along the way, and you learn a lot as you go, starting with this tonight. So how does it help you to meet with a lender? It's really, really important to start with that step initially so that you don't fall in love with a home that is outside of your budget. So we want to go over the details with you and look at your information to make sure that you understand what you need, understand what's going to happen, you have an appropriate goal set, and can go forward from there. It's really upsetting to go in the opposite direction only to find out that a home that you love isn't going to work out. So having the information early is very helpful. We also can help you set those goals to figure out if you're not where you want to be right now, how to get there. So that is it's never too early to start meeting with us. So when you meet with us, what we're going to do is review your current situation and see if you're in a good position to buy now. If you're not, provide those steps, like I said, and then we're going to help you determine what purchase price you can afford. Okay, and then we're going to talk about a pre-approval. What even is a pre-approval? It means that we've reviewed your information. So there's a couple of different ways this can be done in the industry. We do a full pre-approval, not a pre-qualification. That means that instead of you just saying you make about X number of dollars, we're actually looking at your documents. We're analyzing how that's going to be looked at when it goes to underwriting. It's really important because having that pre-approval letter from your lender adds a lot of credibility if you get to the point of making an offer. So having a good, solid pre-approval is really important. Do you need a pre-approval to meet with a realtor? Any realtor is going to tell you yes, they want you to have that in hand first. We don't want to have you spend time looking at homes unless you know that it's going to be something that's comfortable and affordable and a good fit for you. How long is a pre-approval good for? It varies a little bit. So our file might stay open for you for a much longer period of time. Like I mentioned, we might work together for even years in some cases. But generally, each letter that we write for you is going to be good for 30 days. I know I personally like to, every time that you make an offer, if you don't end up getting the first home that you see, I do like to just touch base and update that letter so it reflects exactly what you're offering. But the letters are good for 30 days. That being said, that doesn't mean that you have to start the whole process over every 30 days. We do keep things on file and work with you over a longer period of time. So when should you get a pre-approval? Do you have to be fully ready to buy a home? No. Actually, in Lindy's ideal world, I would love to meet with everybody who's interested in buying a home a whole year before they're ready to buy, just to get that basic sense of where things are, what programs might be a good fit, what you might want to focus on for the next year. And that answer is not the same for everybody. For some folks, you really need to work on paying down debt. For other people, it might be squirreling away a few extra pennies. So it is not too soon. We love to talk to you. So I always say, as soon as you're ready to come talk to us, that's a good idea. You don't need to be fully ready to buy. And lastly, what does a lender look at? Well, we're going to jump into that in a little bit more detail here on the next slides.
All right, so one of the first things that a lender is going to look at is your credit. So we want to know what your credit score is. And your credit score is important because it can affect whether or not you qualify for a mortgage. It can also affect your interest rate depending on the loan program that you're in. And so to help you guys understand your credit score a little bit, we have this pie chart that shows you what factors influence your credit score. So as you can see, one of the big sections that influence your credit score is your payment history. So it's really important to make sure that any of your current debts, whether that's student loans, auto loans, credit cards, that they're being paid on time. If you forget one month and you have a small late payment, that's usually not a big deal. But if you are frequently late on payments, you've got multiple missed payments, if you have anything in collections, that's when it's going to really start to hurt your credit score and it could affect your ability to get a mortgage. Another big section on this pie chart is the amount owed. So if you are constantly maxing out credit cards, or if you've taken on a lot of debt and have high balances on those things, that can also negatively affect your credit score. So your credit score is really looking at how you handle debt. And so if those things are maxed out and high balances, it looks like you're struggling to make those payments, or maybe you've taken on too much debt. So really, if you can keep those balances on the lower end or just keep making those payments to bring down those balances, that will help boost your credit score in the long run. Another factor is the length of credit history. So if you've had a credit card for 5+ years that you make all the payments and you handle it really well, that's great. That length of credit history is going to help improve your score because it shows that you have responsible usage of the debt for a long period of time. If you have a credit card for just 6 months, it doesn't show that history. So having those longer credit reporting debts on your credit report is beneficial to you. And then the last two little pieces of the pie is a credit mix and new credit. So a credit mix is having a variety of loans. So if you just have one credit card on your credit report, that's great, but it doesn't show a variety of debts. If you have student loans, auto loans, credit cards, and you're making all those payments, it shows that you can handle multiple types of debt and you're responsible with them all. Then that's going to help boost your credit score. And then the last little section is the new credit. And what this is looking at is if you just opened a card or if you just bought an auto loan, it doesn't have that long-term history to it. So it's kind of a newer account that might negatively affect your credit until you've built that history of responsible usage on it. And then let's go to the next slide. So some do's and don'ts when it comes to your credit. One of the things that we strongly request or ask of you is to get a copy of your credit report each year, and you can get a free copy at annualcreditreport.com. And this is really important because it's good for you to familiarize yourself with what is showing on your credit report. So you'll want to double check and be like, yep, I've got that credit card. Yes, I have a couple student loans. Those all look good. It's also important to make sure that the balances are accurate and that there's nothing showing on there past due or delinquent. You want to make sure that what's on there is accurately being reported. It's also a really good tool to make sure that somebody hasn't stolen your identity. Maybe somebody's gotten your social and your birth date and your information and they went and bought a new car and it's now under your social. So it's a really good tool just to make sure that your identity is also still protected. So that's something we encourage you to do each year. Another thing to do is just to understand how your credit score can affect your ability to get a mortgage. So like I said earlier, if you have a lot of late payments or really delinquent on things, it could lower your credit score. And if your credit score goes below a certain threshold, you might not be eligible to get to qualify for some mortgages. So it's important to try to keep that score up as high as you can. And then also, depending on what loan program you are in, the credit score can influence your interest rate. So if you have a really good credit score, then you could get a lower interest rate. If you have some hits to your credit report that have lowered the score, then it could increase the interest rate that you qualify for. Another do is just to maintain that history of responsible usage. So make sure you make those payments on time, that you're staying on top of any debts that you have. Every time those are being reported as payments made on time, that's great history and can only help your credit. So the last bullet point there, just to repeat it one more time, is make your payments on time. And then on the opposite side, some things to try not to do. So if you are thinking of buying a home in the next couple months, we strongly encourage you not to open any new credit accounts. So if you're going shopping at a store and they're offering their store credit card, we'd like to say pass on it for right now. Or if you're thinking you want to get a new car, but you don't need one, try to hold out until after you've bought a house. Anytime you get a new credit account opened, it shows as a new account, so it doesn't have that history of payments being made, but it also is an inquiry on your credit report. And if you have lots of inquiries on your credit report, that can lower your scores as well. So try to hold off on opening anything new for the first couple months before you're thinking about buying a home. Another don't is to max out the credit limits on credit cards. So if you have a credit card for $1,000, try to keep that balance low. Let's try not to keep it up at the $1,000 range. If you're maxing out credit cards, it just kind of shows that maybe you're struggling to pay down the balance, or maybe you've kind of bitten off more than you can chew and you're struggling to make the payment. Um, Typically, what people say is to try to use less than 30% of what the credit limit is on credit cards. So if you have a credit card where the maximum amount that you can spend is $1,000, let's try to keep that balance at $300 or less. And if that means you have to make a couple payments every week or every 2 weeks to keep the balance lower, that's great. We really don't want you to have to we don't want to see your credit scores being affected because the balances are a little bit higher than what is good for your scores. And then just to say it one more time, try not to make those late payments. As you saw on that pie chart, the payment history is what is the biggest influence on your credit score. So if you can avoid making those late payments, that's great. If you have a payment due on the 1st and you just don't have enough cash, maybe on the 5th when you get paid, make that credit card, that payment as soon as possible. Let's try not to let it go more than 30 days late when it would show up on the credit report and start hurting your credit scores. And then the last thing, a lot of people don't think about this, but if you have some credit history with something that has a long repayment history and it's really good repayment history, then let's keep that open. Don't feel like you have to close out your credit cards and you're worried about the balances on them. If you're using them responsibly, then that long-term history is actually beneficial and can help increase your credit scores. So don't feel like you have to close them out.
Okay, so when you come to meet with us, there's a couple of things that we're going to ask for. It depends. You're going to find that you hear that a lot in the mortgage world. It depends, but it does depend on your exact situation. But to give you a ballpark idea of things that would likely apply, we're going to ask for your last 30 days of pay stubs. We're going to ask for your last 2 years of W-2s. When we're right at this time in the year, though, most folks have their W-2s where you might not have your 2025 yet. We'll start with a 2024 and then add the 2025 when you get it. But most folks are getting those this week. If you have been self-employed or are interested in some of the special programs for first-time home buyers, we will need your last 2 years of completed federal tax returns as well. We might need to do a verification of employment. What that means is that we send a form out to your employer to gather some information. That's when we need a little bit more detail than just what the total number is. So if somebody works and they earn tips, for example, or have a lot of overtime or a lot of bonus income, those are things that might be slightly out of the norm that we need to get a little bit more breakdown on. So we'll talk to you about that. We also need your bank statement. So we need to know how much money you have for a couple of reasons, how much you have available for down payment and closing costs. We also need to know, see that money coming in and going out. And then we also, for some of those programs that are special, there are limits around some of those things. So we'll talk a little bit more about that later. But those are kind of the basics of the paperwork that you can expect us to ask you for. The good news is we do stop short of trying to collect your firstborn from you. Okay, what if you have tricky income? What if we were just talking about W-2s? What if that's not what it looks like? Maybe you have had a recent job change. Maybe you do a couple different types of seasonal work. We see lots of folks that do maybe landscaping in the summer and then work up on the ski mountain in the winter or have farming related jobs, things like that. All very common around here. The good news is we're pretty good at handling those kinds of things. So it's not impossible to buy a home if you do have something that's maybe just a little bit outside of the box. We do need a little bit of history. So in most of these cases, you need a longer time of being in that line of work or with a particular employer. So a lot of the time, we're going to look at a 2-year average for anything that's a little bit outside of something that's a really straightforward X number of hours per week. That's going to go for second jobs as well. That can count towards your qualification, but you do have to have a 2-year history of doing that same secondary employment in addition to your first. So lots of folks that do that. Same with self-employment. I mentioned this on the document screen that we would look at a 2-year history for any self-employment, and there are good ways for us to document some of those additional pieces that might be really important parts of your compensation, but not part of the basic wages. All right, after we look at the income, we're going to get into the less fun part and look at how much money you owe. So we're going to look at all types of debts. We don't need to look at things like phone bills and utilities. That's a common question. Anything like a car loan, credit cards. This is a big one, student loans. Lots of folks out there who have student loans that might not be in full repayment. Because a mortgage is a long-term obligation, you may not all know this, maybe you do, but most mortgages are 30 years. So theoretically, sometime during that 30 years, your student loans will come due. So there are particular calculations we have to do. So we do need to look at that full student loan balance in order to determine what you're qualified for. We are also going to ask what your housing expense is right now. That's a debt that theoretically you're not going to have going forward. Once you own a home, you're going to live there. You won't pay rent anymore. But we want to have an idea about how much have you been paying, and that gives us a good sense of what might be comfortable for you going forward as well. So how do we determine your purchase point? We have your income information and your debts. We're going to look at those in relation to each other and any estimated mortgage payment, which is going to include taxes and insurance as well. All of that together comes out to something called the debt ratio. And that is really a tool that we use that is standard across the industry to say what is affordable for this buyer. How can they make this payment and still afford to buy groceries and live their life and do all the things they want to do? So that's our job to say, does this fit within the requirements for these programs based on this information? Sometimes we need to make little adjustments one way or the other and can give you some guidance on some of that. Often, that number might not be the same as what feels comfortable to you in your budget. So what I preach over and over and over again in my office is that I'm going to determine how much we'd be willing to lend. You need to determine what your budget is. And sometimes that number is less than what we think looks comfortable on paper because all the rest of your life isn't necessarily factored in to those numbers. I know a good example is that I have little kids in childcare, and that's a substantial payment every month, but it doesn't show up in those debts. So I would want to be cognizant of that as I was considering entering into an agreement to buy a home with what my mortgage payment would be and be aware that I might have a higher expense. And there's lots of other things like that. So your budget is a really important number for you to know and what feels good for you. In addition to what we think looks affordable on paper.
All right, one of the last sections that a lender is going to want to look at is your assets. So how much money do you actually have? What do you have in your savings? What do you have in your checking? What do you have in your retirement? Even if you don't plan on using all of it to purchase a house, we still want to know what you have. Lindy kind of hinted at this before, but some of the grants and programs out there that can help with buying a home do have asset limits on them. So we want to know the total picture of what that looks like to then go in to see if you are eligible for any of those programs. Another reason why a lender is looking at the assets because those amounts, your savings, your checking, your retirement, how much you're actually going to use from them to go toward your down payment and closing costs will be helpful in us figuring out what we can pre-approve you for. So the down payment, that is money that you're going to pay up front at closing that goes toward the purchase of a home. So if you're buying a home for 300,000 and you're going to put 50,000 down, then the bank's going to do a loan for the remaining amount, the 250,000. So that 50,000, that's your down payment. And that can be from funds that you have saved. It can be funds from a relative who might be gifting them to you. It can be funds from any of the grants or loan programs like a second mortgage out there that could help with buying. There's a few different options that can help make up that down payment. We also need to see if you have enough assets to cover the closing costs. So this is something that a lot of people aren't aware of. Sometimes they're only thinking that they need to have enough money for that down payment, but there are fees involved with buying a home as well. So you have fees from the bank, some underwriting fees. You're going to have an attorney in the transaction, so we're going to have to pay the attorney. We're most likely going to need an appraisal done, so we have to pay an appraiser. The state of Vermont is going to take a good chunk of money too from buying the home, so that's the transfer taxes. So to get a good picture of what the closing costs, the total closing costs look like to buy a home, I'd say come talk to a lender. So depending on what your loan program is, depending on what you're interested in, what your purchase price is, those things can all factor into how much you might need to pay for closing costs. So again, we want to make sure that you have enough saved in your assets, your checking, your savings, retirement to pay for not only the down payment, but also the closing costs. So how much do I really need? We get this question a lot, and I'd love to give you a straight answer, but I don't have a straight answer for it. What we like to point out is that you don't need 20% down. So it's kind of a myth out there that you shouldn't even start looking for a home until you've saved that much. But that's really not the case. There are loan programs out there where you could put as little as 0% down. You could put 3% or 5% down. You don't need to wait until you have the full 20% saved. There are also grants out there and assistant loans that are available to help. So when you talk to a lender and kind of share all of your information, we can look at it and say, hey, their income fits between this bracket, or they have less than X amount in assets. They're a good candidate for this grant that's out there right now. Or there's some first-time homebuyer loans that offer a little incentive. So we can help determine if you are eligible for those things. So I don't have a straight answer on how much money you need, but if you sit down with us and kind of go over your specific situation, we can probably get a good estimate for you.
Okay, so that's a lot of information in not a lot of minutes. What is the next step? The next step is to make it pertain to you. So you want to go ahead and get together with us. We'll take a look at your specific information, break it down in bite-sized pieces for you that apply specifically to you. So maybe all of this didn't land exactly where you might be sitting today, but we can help you get there. We're going to determine your budget and then review the cost, like Elizabeth said. And from there, you are realtor ready. So thanks for hanging with us. We are going to pop over now to have Heather start presenting. If there's any questions somebody has specifically, feel free to throw it in the chat on some of that. We're going to save time for questions at the end after Heather goes. She's going to talk a little bit about the realtor side now that we've got the lending piece handled. So with that, Heather, I'm going to kick it over to you. If you can unmute.
Sure. Thank you very much. And from somebody who has not heard this presentation in a very long time, I think you guys did a great job too. So it's a lot of information and it's a little overwhelming and I think a little scary for people when they are starting this process. So I think that you guys do a great job of trying to answer questions for people. So I would also reiterate that as a realtor, we do like you to have met with loan officers before we start looking at properties, just sort of to tag on to what Lindy was saying, that often people can be disappointed. You think you can afford a house based at this level and you fall in love with it, and then you realize that the loan isn't really going to work out for you. So I would like to reiterate that the first step is definitely going to the bank and having a conversation with a lender. And it may seem scary and overwhelming, but you guys do a great job of breaking everything down for people. There is a lot of advantages to owning a home, and as this slide points out, it allows you to build equity. I grew up in a dairy family and with a dairy farm family and a mother who's been in real estate for many years, but the two things that we're always bombarded in my house or my life was that when you own a home, you're paying yourself instead of paying somebody else. And even though you're paying the bank, you are really paying yourself. And what that means is that you're building equity. So instead of paying $2,000 a month for somebody else to have equity in an apartment building or whatever, you're paying that value. When you get a loan, you're going to pay some in interest to start off with more in the beginning, but then you're going to be paying towards that principal. That equity will help you do other things in life. Home ownership is something that allows generational wealth to be transferred. There's a way that you can use that to maybe someday buy another investment property, or someday help pay for your kids to go to college, or someday, buy that car that you were dreaming of, or whatever it may be. But it is putting money in your pocket, which is something that will allow you to grow both financially and even with your independence. So it's an incredibly important thing to be able to do. So One of our biggest roles is after you've met with a lender is also helping you navigate maybe some of the questions that they've had for another person that hopefully you end up feeling very comfortable with. We like to kind of talk you through what it is you're really looking for. I have found in my experience with this, what you start off looking for or what you think you want in a home isn't necessarily what you end up really wanting in a home. I think going through the process, looking at houses that are on the market and not just saying, I will only look at a 3 bedroom, 2 bathroom, but maybe you would consider a 1 bathroom because depending on the price point or depending on the location, you might be willing to sort of sacrifice, if you will, for that until you could afford to put one in. So there are all sorts of things that you look at when going through. One of the things we'll do as real estate agents is ask you, in a perfect world, what would you like? And then, okay, out of that perfect, situation, what are things that you're willing to negotiate on or compromise on, I guess is a better way to say that. We will help you find inspectors. We will help you find, if need be, after an inspection, somebody who to come in and help you get a quote on what the electrical work might be. We end up being the supplier of information is how we often think of ourselves as far as that. And then when you go to put in an offer, we're the ones who help you through the paperwork. So we will put together an offer for you. We will hopefully beforehand, because as our market is slowing down a little bit, you're not necessarily having to get an offer in 30 minutes after you look at the house. Hopefully you have a little bit of time nowadays. So being able to talk you through what some of those situations are. And after you've gone through all the paperwork initially with the bank, you'll end up learning about all this other paperwork that we have to go through with you. And so often the initial meeting is the question about what it is you like, and then sending you home with documents for you to look over and review. So then we could sit down and go over that as well and see and prep you for when you're ready to put in an offer. And yep. So how are we paid? So that's a big question these days, right? Because I don't know if any of you've seen in the last couple of years, there's been a lot of news around do you have to, or who's paying for the realtor in the sense that everybody always assumed that it was the seller paid both sides of a transaction. You have people selling and you have people buying. I always like to say that it is paid out of the transaction. People price their homes often with considering paying for both a buyer's agent and the realtor who's representing them. Sometimes they don't. So that is a conversation that you will have with your realtor is if the selling the transaction is not going to pay the realtor, then how are you going to pay them? So we have documents that we go over with you that say that, if they don't offer it out of the transaction, we write it into an offer, or you might have to cash flow it or whatever, but we have to legally go over those things with you ahead of time. You have the right as a buyer looking for representation to negotiate that. So there's no kind of, I think it was you, Lindy, who said it, that there's no straight answer on any of these things. This question, there's really not a straight answer on, but it is a big discussion that you should have with different realtors or with the realtor that you plan on using is exactly how is that going to take place. And in our line of work, a realtor is supposed to have that conversation with you and be upfront and honest about that ahead of time. So that should be something that you're very aware of before you end up in a situation. Yep, we're good to move on. So again, this is sort of what we talked about a little bit before is, the first kind of time. And as it goes on, you're going to sit down and have a conversation with a realtor and define what it is you think you're looking for and what the different things that might affect you changing your mind on that. You're also going to talk about when it is you're wanting to purchase something. We happen to live in an area where inventory is not huge. There's not a huge amount of inventory. So as both Lindy and Elizabeth said, starting the process way before you actually think that you might be ready to is something that's really not a bad idea because we do not live in an area where there's lots of buildings being put up on a daily basis that you can just go in and buy. I think it is tight. Um, and I think that the biggest thing going into this is that being able to uh, but everything's willing to change or you need to be able to sort of roll with what's out there. Everything is a learning curve. As you see more homes, you might change your mind about things. You might not, but it is something that everything changes sort of as you're going through this process, as you get more information and develop more of a plan. So, um, next slide, I think, is good. So yeah, so in making an offer, there are all sorts of things that will go into that. So the listing agent has a price that they feel or the client feels is what that property is worth. Depending on how long that property has been on the market, if there's other offers that are coming in, that will reflect on what we will suggest that you put in for an offer price. Often the terms are based on what your lending institution is telling you is something. Sometimes it's 45 days, sometimes it's 60 days on to turn around what it might be to close on a loan. And then you have contingencies. And I think that this was alluded to earlier, but you might have an inspection in your property. You might want the septic inspected. You might want the roof inspected. Like, we get very specific or very general in those different things. And that's something that as a realtor, we will sit down with you. I try to have those conversations with people ahead of time. So that way they've thought through a lot of these things based on homes. One thing that's nice with our market and the way that it is heading right now is people actually do have the ability to put contingencies in their offers and still have those offers accepted. And so, you can ask for whatever you feel is important to ask for, and the seller may counter that and say, no, we won't accept your offer with this. But that's something that you'll talk to your realtor about and talk through. And each situation, so if you end up making multiple offers, your contingencies may be different depending on what else is going on with that. So and as that last line says, and is if you once your offer has been accepted, you're under contract, which is an exciting, fun thing, but it is the beginning sort of the process here also. It's not the beginning, you're in the middle of it, but there's still things that have to be worked out as you're going through it. And that's something that we help you with. I often joke with my clients that I become their annoying, parent that is not their parent with, have you done this yet? Have you done that yet? These are your timelines. Like, we need to stay on top of this. Like, don't forget to do X, Y, Z. So some of those things and the things that are listed here are things that are going to happen right before closing. So after you've gone through and you've met your contingency and the bank is pretty sure they're going to give you the clear to close, you're going to start going through and talk about when are we going to be making the changes to the phone, the cable, all those things. One thing I will say in this, now we are suggesting as realtors that once you go under contract, almost immediately that you're reaching out on homeowners insurance, because we are seeing in this area, and I think actually throughout the country, that insurance companies are getting a little bit more particular in the homes, and just because a home or the previous owners had insurance through company ABC, that company is not necessarily going to insure the home. And we've found that working with local insurance companies has actually been a little bit easier. They understand that slate roofs, even though they're old, are good roofs. And I would say that, and this is not just because we are on a call with people or on a Zoom with people from the National Bank of Middlebury, but having local lenders will make your offer stronger to the sellers because we as real estate agents know that they understand what it's like to be in our community and that, you know, an old home isn't necessarily a bad home, like that there are a lot of different quirks that we have with living in the communities that we live in and the homes that we have through. So the final walkthrough, number 8, is something that happens within 24 hours of the closing time, typically. As real estate agents, we prefer them to be the day before, not the morning of, just in case we find anything. And what that really means is that you get to go back into the home and you get to walk through and you need to make sure that there's not a bunch of garbage left in the house, or that when the person moving out didn't put a huge hole in the middle of the wall. So, and then if by chance some of those things are there, then we help you with the attorneys figure out how they're going to rectify that so we can hopefully still get you closed the next day. So, I guess we can move on to the next. So, okay, well, that was it. I think one thing I should say also is just that realtors in our community are here to help you through this process. You should feel confident in being able to ask as many questions as you want and feel comfortable with who you do hire to work for you, because that is what you are doing, is you're hiring us to represent you and help you through something. So don't ever feel silly or feel like you shouldn't be asking questions, that's something that you really should be doing and making sure you feel comfortable with people. So
Wonderful. Thank you so much, Heather. That
Mhm.
brings us to the end here. Go ahead.
Perfect. Does anybody have any questions? I don't think I saw anything come through the chat, Lindy, unless I'm